Yo, what is up, guys? Welcome to episode 7 of the stock market course. And in this episode, it's going to be a short episode on the PowerPoint presentation, but I will be going over the Weeble and give you guys more description. But yeah, let's get right into this course. In this course, I'm essentially going to go over just the basics of strategies and cover almost most of the things that you guys do need to know. We start off with the overview of what we are going to discuss. So just trading strategies, which is ORB, break and base, momentum trading, squeeze strategy, reversal, dead cat bounce. I'll explain this all in more detail on Weeble. I'm just going to go over a few examples on the presentation, but most of this PowerPoint will be on Weeble. So I want to first discuss the opening range breakout and what this is. So with this, it only works during the most powerful time of the day, and that is between 9:30 to 10 ET. Why does this only work between this time period? It's because it has the most volume in the market. This is when every single broker is open, and this is when majority 100% of the market essentially trades during this time. And it's all about momentum stocks. It's all about the stocks that are running the strongest. For example, Hollow could be one example. That stock that just runs, there's no real pullback. But yeah, this is a example of the time period you want to be trading this. Now you got the typical ORB, 15 minute. You mark the high and you focus on the surging stock. Remember, timing is key for this. It will not work. It will not work if you do not use the first 15-minute high. I'm gonna give you examples on Weeble, as I said, but this is just to give you guys a bit of an example. So now you got the 30-minute ORB. This is not your typical ORB by any range, but this is an essentially the adapted style. A lot of people do use this. Less volatile, yet is very good to use. I will give examples of how to use this and why it's less volatile. Momentum trading is one of the most important aspects for us small cap traders. What we look for is momentum. As breakout traders, you could say, what we look for is momentum. What momentum is, it essentially gives us further highs. It essentially pushes a stock towards new legs, making us more money. But it's a good way to trade and a good way to essentially make bigger money in the stock market. Quick money, you could argue as well. You can use the 1 minute time frame, but you have to be extremely quick. I'll give you examples. Only pull back 1 or 2. Volume is the most important factor when it comes to this. Why is volume so important? Because volume is what makes you money, right? Without volume, you're not making any money. So you're looking at the stocks with the most volume coming through, and you play the 1 minute breaks. This you can only do on your own. It's very volatile, but again, it's high risk, high reward with this kind of trading. You can also use 5 minute chart. I'll give you more examples on Weeble as we go along. What is the end of day squeeze? So the end of day squeeze is the biggest gain is at the end of the day. Shorts covering, high risk or high reward. So what happens is at the end of the day, there'll be your top 3-4 runners, and it'll be a battle between the shorts and the longs. If the longs can hold on to the stock, you usually get a lot of shorts covering on the stock, leading to an increase in price. So when the shorts exit their short position, the price will jump up and then those shorts will enter the stock again towards the long side. But yeah, these are some good examples, and I'm going to go over it on Weeble in more detail so you guys do have a better idea. It makes it a bit easier for you guys. Just let this Weeble load up. Here you go. But yeah, it'd be a lot easier if I use this. I want to just use more of a practical way to explain to you guys. Just makes it easier for you and me. But let's just use Weeble as an example. Okay. So we're going to start off with the opening range breakout and what I mean by this. Now, I'm not going to use Nuke as an example, but I'll give you an example. Just want to load up this Weeble so we can go ahead and get started. Okay, let's do it. So the first one to discuss is opening range breakout. So first I'm going to give you an example of this. I'm hoping to find some stocks that also have this example. So this is your line, right? And I'm going to give you examples. I'm going to give you timing examples as well. So just, I want you guys to keep your imagination hats on, right? Don't just think outside the box. Obviously it's not literally, but I'm going to give you time. So just pretend we are at 9:30 a.m. ET. Now the stock starts to break a level of support. So let's just say we got a level of support here. We break the support, and it's 9:30. We break, we push, we break, we push. Now it's 9:15. It makes the high, it drops. Now after those 15 minutes pass, you want to mark that high. Now how would you enter this trade? Simply by boom, boom, waiting for a break, waiting for that retest, and then looking for an entry. So your entry will be, I'll show you where exactly. So this is your 15-minute high. Your entry will be around this level here. Once we break back above on the retest, your stop loss will be just under the pre-mark, just under the high, the opening range breakout on the 15-minute chart. So this is one example of this. Don't make the mistake of entering before. Don't make the mistake of just entering the break, because it could just fade. Enter the retest. Wait for the retest on low volume, and then you could wait for a break towards the new high. That's your 15-minute example. The 30-minute example. So 15-minute example is a lot more volatile. Why is it a lot more volatile? Stocks are moving a lot quicker in the first 15 minutes because traders are looking for direction. When stocks break out, they move a lot faster, and they'll probably be harder to get into, or they'll drop a lot more. Now I'm going to give you an example on a 30-minute chart. Now let's just say this is, now we're approaching 9:15. We got our 9:15 high. We'd mark our 9:30 high. So now we're at 9:15, at 9:30, 9:45, 9:50, 10 o'clock. Play drops. Now that's your 30-minute ORB just here. This is a lot more useful in my opinion because stocks now have found their direction. Either this play runs, and if it runs, it's in a run. Good, because stocks have decided to make their move, and this stock is, longs are going to start looking, okay, this stock is still up the first 30 minutes, so we could look for a long position, or stocks will drop. So it's a good way to kind of avoid stocks that are being shorted and go for stocks that are long. So stocks where most of retail is trading, algos are looking to trade, but 30-minute ORB in my opinion is a lot more of a safer option, less volatile. I'm going to try finding some examples from today. Let's see if there's any examples. I'm going to see. I'm just looking through the watch list to see if there's any morning runners today. Let's see, is PMAX a runner? I'm not too sure if there was any today. I'm just looking through if there was. I think there was one. I'm trying to get my head around it, but it's hard to really know. Let me just see which one it was. I think it was, I'm just looking through right now and trying to see which one it was. Novoxo, VLGS, Camera. I'm looking through in real time, guys, right now. But there was a stock today that ran quite violently, actually. Very violent. It was very violent. Let me just look in my... Okay, I think I got it. I think it's PHIO. This was a good runner. But I want to see if it actually failed or broke the first 15-minute high or not. So yeah, it ran into the open. So now let's just see, right? So I've got the chart marked on the 15-minute. 9:15. No, so this stock wasn't it. This stock wasn't one of them that ran into the open. I'm trying to find a stock that ran into open. Let's just see if there's anything else. Let's try to see. So there'll be this a runner today. Let's see, 10:15, 10 a.m. This is a good example of the 30-minute ORB, and even possibly a 15-minute ORB. So the 15-minute ORB is just here. Yeah, so this is both the 15 and 30-minute ORB. You look here, right? It's 9:45, 15-minute, and then you get 10 a.m., 9:30, 10:30. That's a 30-minute, 15-minute. Look, we fail to break. It's not above. Remember when I said about the retest? Always wait for the retest. It breaks out, it retests, and it runs. RZB is a very good example of this strategy, which you guys can use to your advantage. Now, hope you guys understood this. If you guys understood this, just let me know. If you guys never, I'll go over it again in a future session. But just drop it in the comments below. Let me know. Now, momentum trading. My favorite. This is what I used to do all the time, and I never used to love anyone. But I'll give you the example today. Foxo was an absolute steal. I posted this on Twitter as well. But what you do is you want to market daily always market daily levels. So you know, okay, what are the significant levels of where you could reject? 0.39 is that level. Now you switch to the 1 minute chart and you look for breaks on the 1 minute chart. You could enter this 2 to 3 times. Now your number one entry on this is, look, it's breaking. On the 5 minute, it's completely broken out, right? So let's look on the 5 minute chart. So on the 5 minute chart, it's just a break. Look, the kind of the path. Look at the volume on it. 4 million, 2.5 million, 4 million, and it's moving at a good pace. Now you switch up to the 1 minute chart and we look for the entries. Look, your first entry, you wait for the 1 minute break. You got 1 minute here. And look, you wait for the close above. It closes, you enter, you want to risk below the red. The only thing is you have to have 10% risk, and then just aim for the break, aim for the high of day break, hoping you could push more. And then you have another entry around this level here. Breaks, closes above, pushes. Your risk is just under the candles, about 7% on that, 16% move, and then you want to look again. So with this is very quick. So this on this occasion you probably failed, and you came back down and you took a stop. So with the 1 minute time frame, that's what you do. You just aim for multiple scalps, possibly a lower size, and you hope they break. I do this a lot in after hours as well, where I just use the 1 minute and we just play momentum. So you want to play stocks that are continuously running. I want to see if AEON was an example. AEON is another example of thingy. AEON might be an example of it might even be a good example of ORB. So look, this might be a good example of the opening range breakout. And this. So oh yeah, this is a very good example. So the stock, it starts to gain a very, that's 20 million volume, and then 10 a.m. it has another, and you mark that high. Now look, we've marked the high right just there. Just do the 10 a.m. one. Show the 5 minute chart and look. Breaks out, holds, retest on the red candle, gone. That's the opening range breakout. Now let's look at the 1 minute chart and how we could have traded this if you were playing momentum. So the trade like this, you could only trade it based on momentum. So it breaks out, you're looking for a pullback, it starts to pull back, downtrend, close above. Your risk is just below, about 8%, and look, it ends up moving there. Then you got another downtrend here. Downtrend, close above, risk below the red candle, again pushed above, another 1 minute candle there. So this is another good example of your momentum trading and how you can use this to your advantage. Momentum trading is essentially quick trading, playing stocks with high amounts of volume. Now let's look for another one. End of day squeeze. What do I mean by end of day squeeze? Not every player has an end of day squeeze, but you could use examples like, let's just see, maybe something like, let's see if RJTI had it. I think RJTI had it yesterday, or QBT. I think these players had it yesterday. I'm not sure when. You probably won't find the example today. I didn't see many do it today. But something like this. I think market closes around this time here, right? So look, market closes. Shorts are not able to bring this down. The stock squeezes, right? Shorts exit here. They exit on the close and it ends up squeezing towards 12.36. And then it instantly pops down. Sellers just, the buyers that bought it here, they took their profits. And then it just continued on. So that's a good example of end of day squeeze. Shorts cover, high risk, high reward trading. Not all the stocks will do this, but it's a good example. Now let's just I'm going to give you a few more things which I want to discuss. One was dead cat bounce. Dead cat bounce is one of the, it's a very hard strategy to trade, but we could use WNW as an example. So WNW, why is this a dead cat bounce? A dead cat bounce when the stock has a significant drop of price, something like this essentially, and you have a gap down. To be honest, this might be a watch soon anyways, this WNW. But with this, then what you do is, in order to trade this, you just have to wait for that close. So once it drops, possibly switch to the 5-minute chart, see where it drops. So when that dropped, it dropped all the way to here, 0.31. It started to form a bottom, it bounced all the way to 0.41. Hard to trade, very hard to trade, very hard to trade. If it goes wrong, it will be bad. Like for example, this, it bounced 0.74 all the way back to 0.97. That's a good amount of profit. People do trade that. It's hard to time, hard to trade. Trade could drop even more. It's a risky strategy, but again, it's a strategy which can be used. So another one is, you could use this reversal. Is a typical strategy. Reversal is the time of day. So a lot of reversals happen, I say, between 10:30 ET until around 12, and then around 1 ET, 1 PM to about 2ish. So after lunch, you see a lot of reversals that plays. They decide if they're going to stay, push, etc. RR is a good example. So RR, you see at 1 PM, what happens is, look, after lunch, the play starts to reverse. It has a drop into 11 AM. Starts to reverse around 11ish, 11:50, pushes up, and it completes a reversal. It's a new high day. So that's another good one for you guys to know. But these are just strategies for you guys to like just keep an eye on. Hopefully it helps you guys. If you guys enjoy this seminar, guys, hit that like button, drop a comment below. I'm done for the week. Yay! I'm gonna go chill, relax. And yeah, guys, I really do appreciate if you drop a like, a comment, subscribe. I'll catch you guys soon. Peace.